I believe Bitcoin is about to see a major rejection in the market, and in this video, I will be explaining why based on the current charts and the historical data. Now, I'll also be giving an update on my current Bitcoin short and discussing my plan moving forward. So right now, Bitcoin is testing huge resistance. Now you can see here, we're coming into contact with two major moving averages, which is the 200-day EMA, which is an exponential moving average, and the 200-day SMA, which is a simple moving average. Now, these are two very powerful moving averages. You can see here when we broke below, this kind of confirmed or initiated the start of this major downtrend here. And now we are coming into contact with them again. And as you can see, for the last couple of weeks, we've been finding pretty heavy resistance at those MAs. Now, what you can also see here is we have a golden pocket. Now, this is from this move here, this drop down here, and this is the extension golden pocket. So we've had a bit of a retracement and we've seen price move up to this golden pocket, and this just happens to align very well with the moving averages. Now, this red zone here is also a key support and resistance zone. You can see we found heavy support in this back in December of 2025, and this was also where we dropped to back in March of 2025. Now, we did obviously go a little bit below here, but this was the general zone. If I pull up the VRVP, which is the volume profile, you can see we have a large spike of volume here. So this is a very key zone when it comes to just general volume and trading. And of course, this is all aligning in the same area. You've got the moving averages, you have the general support and resistance zone, and then you have the golden pocket. So huge resistance. It's going to be very hard for Bitcoin to break through here. And this is one of the main reasons why I am short at this current area. So you'll probably recognize this chart if you've seen any of the other videos. And this is my short, right? I started entering here at 75K and I'm laddering into my position up to 85K. So I've got this triangle here to kind of conceptualize my position, obviously starting with very small buy orders down here at the tip. And then as we get to the larger base of the triangle, I'll be going in with heavier orders. So I've done about 2 orders, I believe, so far. My next one is set at around 82.8, I believe, or 83K. So that's higher up into this zone. Obviously, we've got the same zone here that I pointed out in the last chart. But this is basically from 85K to 82K. We have a pretty heavy resistance zone, and this is where the majority of my position will be allocated, right? So if we see a push into here, if we see a push to 85K, I'll have multiple orders firing off in here, essentially bringing my average up, giving me a better average entry price, and then of course better profits as price does come down. So the other thing I want to mention here, and I've mentioned this a lot as well in the previous videos and any updates in the Discord, is that the volume. We've had this nice correction to the upside following this ascending channel here, but what you can see on the volume is we've had consistent declining volume the entire time. Now, when these two things don't agree, it's essentially saying there's a divergence here. Price is moving up, but the volume's moving down. There's not that many people that are trading this upside move. And this can basically be a bit of a warning sign, essentially suggesting that this move to the upside is not necessarily sustainable and could be a part of a larger fake out or something that is going to reverse very soon. Now, we're also seeing a rising wedge here on the daily chart, and this is yet another signal which is suggesting some sort of rejection and turnover in the market, because this is a bearish pattern. 70% of the time these break to the downside, and as you can see, we're getting right to that kind of constriction point, the tip of this wedge, where things do generally tend to break out. Now, what you can also see down here on the prime oscillator is we have a bunch of reversal signals that are also suggesting a reversal to the downside. So we have so much here in this area, all of this resistance, we have bearish patterns, we have oscillators that are signaling reversals, volume declining. All of this stuff is screaming that we're going to see a reversal. And it is because of that why I'm so bearish and why, of course, I have my short open. Now, there is, of course, invalidations that I have to discuss, because this isn't just gambling, right? We have technicals pointing to the downside, but we do also have to have a plan in place in case things do go the opposite way that we are thinking. And that, of course, in this scenario would be a break above the moving averages here, above the golden pocket, and a sustained consolidation above these levels and within this zone here. If we do see something like that, especially if we see a push even higher, perhaps up to like 90K, kind of getting back in this previous trading range here from all of this previous price action, this would then, of course, invalidate all of this previous resistance, as it essentially signals that we've broken through it and we are now flipping them into support, which can lead to a further push to the upside. So that would be the bullish case scenario. If we do see that happen, then I would reconsider. Obviously, my stop for my current trade is up here. It's around 90K, but this is more of a floating stop. It's just going to be something I monitor. Like I said, if we see a kind of consolidation around this zone for a while, then I'll probably exit my short earlier before we push up to 90K. But that's the invalidation. I don't think it's the most likely. Obviously, this is a game of probabilities, and there is a lot signaling for heavy resistance and a strong chance of reversal here. So that's where the probabilities favor, in my opinion, and that's why I'm short. Now, I also want to quickly cover the more macro side of things. Now, this is a fractal chart I have drawn out here, including the previous two bear markets. Now, as you can see in both prior bear markets, we had a pretty similar drawdown in terms of percent. It was around 80%-ish. But more importantly, we had almost an exact same timing drawdown, which was around 363 days, basically a year here for the bear markets. Now, what you can see with the current bear market is we're only sitting around 220 days, and we're not very far down in terms of the price drawdown or percentage drawdown. Now, if we are following a typical 4-year cycle bear market, which looks like we are. I mean, we topped out at the exact same point that we should have topped out based on the 4-year cycle. So it's a hard argument to make that the 4-year cycle is broken, especially while we're in the middle of the bear market. And really, we're not going to know if it's broken until we're way past the bottom. So it's a bit of a lagging indicator. But for now, all we really have to go off is the previous cycles. And this is the fractals for them. And it shows that we're probably around halfway through this bear market in terms of time and in terms of drawdown. So when you factor in this as well as the major resistance that we're sitting at the moment, it makes it quite easy to favor the bearish side. Obviously, if we do see a full bear market like this, we could be in for a lot longer of a drawdown and a lot further as well. I mean, the zone where the previous two bear markets ended is looking around 40K-ish, low 40s to potentially even high 30s for this current cycle. I mean, I know there's even some analysts out there predicting as low as 28K. So things could get a lot more bloody. I don't think we will go to 28K, but I do think the low 50s at least, where that macro golden pocket is here on my my short trade here. You can see down here, these are my targets. You have the macro golden pocket, and then you also have the extension pocket from this little move here. So these are key levels I'm targeting for my trade. But zooming out further, I do think it's a real possibility that we do see a drop down into those kind of 40K, low 40s range. So something to consider. The 4-year cycle has historically been very accurate. It's kind of the main thing we have to go off. So I think it's not something you should completely fade, especially at this phase in the market. So that's going to be it for this video, guys. I hope you got some value from this update. Obviously, I'll be updating you in the Discord on my current short position and any major market moves that I see happening. So make sure you're following along in there. And I will see you guys in the next video. Goodbye.